a key indicator is predicating a recession. It's the US three-month yield, which went higher than a 10-year, called an inversion. It's happened before in recessions of 1990, 2001, 2008. It's the grey lines in the middle, which is the recession, which follows the crossing of the blue and the red parts of the graph. Brad McMillan is Chief Investment Officer at the Commonwealth Financial Network. He joins me now. The reality of this inversion, I know people always say every inversion doesn't lead to a recession, but every recession had an inversion. What do you make of this particular one? I was reading your note.
Well, when you look at an inversion, generally speaking, it is indeed a sign of trouble ahead, but not very quickly ahead. So this says we probably have a problem, but historically it's been at least 6 months, often more than a year. So this is just one sign, and it's a sign that, yes, we have trouble ahead, but it's not a sign we have anything coming this year, for example.
Right, but when it does come, I mean, that's a bit like saying there's a hurricane coming, but don't worry, it'll be next year. What will it look like when it arrives?
Well, first of all, when you look at the timeliness of the signal, this says, yes, risk levels have risen. But we need to see a couple of other things to see a recession. We need to see job growth slow down. Typically, when job growth drops below about 2 million a year, that's when we have trouble, and we're still well above that. We need to see consumer confidence tick down by about 20 points year on year. Again, we're still well above that. And we also need to see business confidence tick down. There's 4 things that have to happen, and only one has. So the clock is ticking, but it's not immediate.
But, Brad, I remember sort of late last year, Alan Greenspan said to my colleague, Julia Chatterley, that if the market recovers, after the lows of sort of mid-December-ish, if the market recovers, be warned, that can be followed by the almighty crash thereafter. Now, does this inversion suggest that there'll be a sinister market fall in the future?
Well, I can almost guarantee you at some point we will see the market go down. You know, when we have a recession, we typically do see markets pull back. But one of the things you need to remember is that we're still seeing growth at the moment. It's slowed, but at the same time, we've had a slow first quarter for the past several years. There seems to be something about the first quarter. So we're likely to see growth pick up again. We're seeing some of the headwinds start to fade. So we are going to get a recession. We are going to get a pullback at some point, but this is not a sign that it's happening anytime soon.
Does it matter whether the short, in terms of an inversion, whether the cause is primarily the short end rising or the longer end falling? I mean, the effect's the same, you do invert, but does it matter which is the dominant movement?
It doesn't seem to. We don't actually have enough data. There's not a big enough data set to draw any conclusions. But what the inversion of the yield curve is really telling us is that people are more concerned about the future than they are optimistic about the present. And so how that happens, whether it's they feel a lot more, whether the Fed feels more confident and raises short-term rates, doesn't matter.
You're the Chief Investment Officer. Take all that we've just talked about and factor it into what should a long-term investor, what should they do?
A long-term investor should have looked at the pullback at the end of last year and said, am I comfortable with my risk? If they are comfortable with their risk, then in that case, they should do absolutely nothing. If they weren't comfortable with the risk, if they got nervous at the end of last year, then they should probably de-risk their portfolios. But right now, nothing has really changed from an investment perspective than where we were a couple of months ago.
Brad, I think this is the first time we've been fortunate enough to have you on Quest Means Business. Sir, I hope you'll come back again in the future. We need to hear this sort of good common sense on economic and matters. Thank you, sir. Much appreciated.